Welcome to the Complete Aviation Solutions Deep Dive number 82.
Great to be here.
Today, we're cracking open a collection of recent updates from the aviation world.
Yep, got some interesting developments.
Our mission is really to zoom in on what these specific pieces of news tell us about where the industry might be heading right now. We're looking particularly at shifts in airline routes and also a key transaction in aircraft leasing.
Exactly. It's about digging into the details you've shared and trying to figure out the signal within the noise.
So we've got details on different airlines, adding capacity, opening new connections. It shows where they're seeing demand, right?
That's right. And then on the financial side, this specific deal it highlights some of the strategic maneuvering happening with the actual assets, the planes themselves. It's connecting the operational moves with the financial ones.
Okay, let's unpack the route expansion side first then. We're seeing some, pretty significant network growth coming from one particular airline. They've been busy adding destinations, specifically new services into Georgia, Tbilisi, and Batumi, and also Baku in Azerbaijan.
Yeah, and what's kind of interesting there is how these are starting.
Yeah.
The flights to Tbilisi and Batumi, they began recently, May 18th and 24th, respectively,
Right.
but initially operating as charters out of Tashkent. They're working with a tour operator partner, even bundling in package deals.
Ah, okay. So starting cautious, maybe?
Sort of. But the plan quickly shifts to increased weekly services for both those Georgian cities, starting in June.
Okay.
And the reasons cited for Georgia's appeal from Uzbekistan are, pretty compelling for travelers. Favorable climate, great food, hospitality, and crucially, no visa required.
Yeah, that visa point is huge, makes it so much easier.
Absolutely. Smoothing out that travel friction makes a big difference.
And the new regular flights to Baku in Azerbaijan.
Those are set to start June 6th. Service planned from both Samarkand and Tashkent. And the information points to, long-standing ties between these regions, which likely provides a pretty solid foundation for these new direct links.
Gotcha. And they're not just adding new places, right? They're boosting existing routes, too.
Exactly. They're boosting frequency on existing important routes. For instance, flights to Istanbul are jumping from 3 to 5 times a week, starting just recently, May 26th. And direct flights to Tel Aviv are getting a second weekly service added from July 3rd, which will supplement the existing Sunday flight.
So more options on those key corridors.
Right. More flexibility for travelers on what look like key business and maybe leisure corridors, too.
So what kind of aircraft are we talking about here?
Well, we're seeing things like the Airbus A330, that's got around 313 seats. Also the A321, 194 seats, and the A321neo with 221 seats. So good capacity.
Right. Decent-sized planes. And the airline's stated goals for all this?
Pretty clear. Meeting growing customer demand, tapping into opportunities for tourists, pilgrims, and business travel, and just providing those sought-after direct connections from key cities like Samarkand and Tashkent.
Okay, so what these specific moves tell us then is that this airline seems to be really prioritizing connections within its immediate geographic neighborhood, Central Asia linking into the Caucasus and the Middle East.
Yeah, I think that's a fair read. It suggests confidence and demand in these particular sort of bilateral markets, maybe seeing less risk or stronger immediate opportunity there compared to, say, longer-haul international routes right now.
Okay, that gives us a clear picture of expansion in that region. Now let's pivot across the globe. Southwest Pacific, another major airline making a move there.
Right. We're seeing the return of non-stop flights connecting Hong Kong and Adelaide in South Australia.
Ah, Adelaide. When's that starting?
Scheduled to kick off November 11th, 2025. It's planned as a 3 times weekly winter seasonal service, at least for now.
Okay, seasonal. And Adelaide becomes their 8th destination down there.
That's right, in the Southwest Pacific. Join cities like Auckland, Brisbane, Melbourne, Perth, Sydney. Those are year-round. Plus other seasonal spots like Cairns and Christchurch.
And there's a bit of history there, too, isn't there?
Yeah, the material highlights that. A long connection with Adelaide. They mentioned their first passenger flights back in '92.
Wow. Oh.
And even starting cadet pilot training there in 1994. So, yeah, relationship spanning 3 decades they're building on.
Interesting. So at the peak winter season, how many flights are we talking about across that whole region for them?
They're anticipating operating close to 90 return flights per week across all 8 of those Southwest Pacific destinations.
90 returns a week. That underscores how significant the Australia and New Zealand market is for their network out of Hong Kong.
Definitely. And speaking of that region, we also have news from another airline focused on New Zealand, specifically increasing capacity into Christchurch.
Right. Christchurch. What's the detail there?
They've confirmed adding 46 extra return services between Christchurch and Singapore.
46 extra. Over what period?
This boost is timed for the peak Southern Hemisphere summer season. So running from November 24th, 2025 through February 12th, 2026.
Okay, peak summer.
And that alone injects over 23,000 additional seats onto that route during that specific period.
23,000 seats. Wow. And the frequency increase.
Yeah, that's notable too. These extra seasonal flights mean the route will operate 4 times a week. That's up from 3 last summer.
Okay.
And when you add those to the year-round daily flights they already have, the total frequency jumps up to 11 weekly return services.
11 weekly. So
Yeah.
up to 5,500 seats available each week.
Exactly. That's a pretty substantial capacity increase for that specific city pair.
And it's not just passengers, is it? There's a freight angle, too.
Correct. This capacity increase also adds outbound freight capability, an extra 64 tons.
Mm.
And this is explicitly called out as a boost for local tourism and the export sectors. Shows that dual role of air links. The local airport management echoed this. They called the route a, quote, lifeline for exporters and a magnet for visitors, highlighting the strength of the partnership behind it.
And it's interesting, this particular route is part of a joint venture, right? With another airline?
Yes, and they're both members of the same global alliance. That kind of deep partnership often, enables these significant capacity increases.
Makes sense.
The material also mentions other airlines are returning to Christchurch for the busy summer too. So it signals pretty broad market confidence in that destination.
Okay, good context. And one more route piece, something about a low-cost carrier?
Yeah, just quickly, we have a low-cost airline launching a new direct flight. This one's from Hong Kong to Chengdu in Jiangsu Province, China.
Chengdu. Okay, how often?
3 times weekly. For this specific LCC, it's actually their first direct flight between Hong Kong and Chengdu. Makes it their 4th destination in the Chinese mainland.
And their stated goals, I imagine it's about growth and connectivity.
Pretty much covers all the bases. Increasing travel flexibility, reinforcing their focus on the Yangtze River Delta region, attracting international visitors, offering connections via Hong Kong for local residents, stimulating tourism, improving the travel experience, and generally strengthening Hong Kong's position as an aviation hub. It shows a clear strategic intent to build out connections within Greater China using that low-cost model.
Right. So, okay, looking at all these route announcements together, we've got the Central Asia Caucasus expansion, the Hong Kong-Adelaide link coming back, that big capacity jump on Christchurch, Singapore, and now this new low-cost route within China. What patterns kind of emerge for you?
Well, it seems like airlines are really focusing on specific, often regional connections, either point-to-point or maybe strengthening certain hub-spoke flows where they see concentrated demand,
Right.
whether that's driven by leisure, VFR visiting friends and relatives, or maybe targeted business opportunities.
Yeah, it feels less like broad sweeping growth and more surgical, adding capacity where they see strong potential right now.
Exactly. It reflects maybe a cautious but definitely opportunistic approach to expansion, leveraging existing relationships like that Adelaide history or perceived market gaps like the Georgia routes.
Okay, that makes sense. Let's completely shift gears now. Let's look at a piece of news from the financial and asset side of the business, specifically an acquisition in the aircraft leasing market.
Right. So we saw news about an engine leasing company making a notable acquisition. They've acquired 4 Embraer E175 regional jets.
An engine lessor buying whole planes.
Yeah.
Okay, and who managed the deal?
The acquisition itself was managed by another company that specializes in aviation asset management.
Right, but the key detail here, I think, is that all 4 aircraft are staying right where they are. They remain on lease with LA Polish Airlines.
Exactly. They're not being moved or anything. And this is where the commentary from the companies involved gets really insightful. The acquiring company, the engine lessor, described it as a continued development in their platform's evolution. They highlighted their ability to access high-quality assets through, and this is the interesting phrase, flexible structures involving in-service aircraft.
In-service aircraft, so planes already flying and earning.
Precisely. Not new ones off the line or old ones being retired. And flexible structures suggest they found, maybe a creative way to make the deal work, perhaps adapting to that existing lease arrangement with LOT. And they specifically mentioned this move shows they're expanding beyond their traditional strength in just engine leasing and end-of-life assets.
That is a significant strategic shift then, for a company known mostly for engines to move into owning and leasing entire aircraft, especially ones already flying for an established operator.
Absolutely.
Yeah.
And the asset management company that helped structure it, they called it a well-structured transaction with a highly capable counterparty, which, usually implies the deal terms were favorable and the process went smoothly.
So the engine lessor, the acquiring company, they've basically taken over the existing lease agreements and the servicing responsibilities for these four E-175s.
That's right. They've stepped into the ownerless role for those specific planes under their existing leases.
So this deal really demonstrates their increasing capability, not just in acquiring assets, but in handling these more complex transactions involving aircraft already integrated into an airline's operation.
Yeah, it definitely solidifies their expanding presence in the broader commercial aircraft leasing space, moving beyond just the engine part of it.
So what does a deal like this really tell us about the state of aircraft leasing and asset management today? An engine specialist buying in-service regional jets, taking over the leases.
Well, it suggests companies are looking for opportunities across the full aircraft lifecycle, maybe, and aren't necessarily sticking rigidly to their historical niches. If you have the capital and the expertise, you might branch out.
Right. And it also points to continued investor interest in aviation assets, maybe even regional jets like these E-175s, if the deals are structured well and involve aircraft already on lease with solid operators like LOT.
Exactly. It highlights the importance of that sophisticated asset management expertise, finding and executing these complex deals involving assets that are already deployed and generating revenue.
It shows capital is still available for aviation, but perhaps it's seeking specific types of opportunities, those with existing cash flows and maybe more creative, favorable acquisition structures.
I think that's a good way to put it.
Okay. So, summing up this deep dive then, we've looked at several distinct pieces of news. Significant route expansions by different airlines regions spanning Central Asia, the Southwest Pacific, Greater China, showing where that operational growth seems to be concentrated right now.
Uh-huh. And we've also examined this notable transaction in the leasing market, an engine company diversifying by acquiring these in-service regional jets already on lease, managed by a specialist asset firm.
Yeah, these pieces, from adding new tourist connections to Georgia and Azerbaijan to boosting major routes into Australia and New Zealand to this quite specific financial maneuver involving E-175s.
Mm.
It paints a picture of an industry that's, well, selectively expanding and strategically managing its core assets.
It's that complex interplay, isn't it, between flying the planes and financing them?
Yep.
They both have to work.
Indeed. It kind of leaves you thinking, when you see airlines betting on these specific regional routes, right? And simultaneously, you witness these complex financial players making strategic buys of in-service aircraft like these regional jets. What does that tell us about the underlying confidence or maybe the caution in different segments of the global aviation market right now as it navigates the current economic climate?
It's a great question. What kinds of travel, or maybe what kinds of asset classes within aviation, are seen as the safest or most opportune bets at this particular moment?
Exactly. Something to consider as you watch how the industry continues to evolve.